long-term chart, and again I've identified a number of key support levels, notwithstanding the 200-week moving average. That for me is the key support level, along with the 9,300 area, which we bounced off earlier this month. So again, the oscillator, as in the S&P on the earlier chart, is looking a little bit oversold. That's not to say that it can't drift a little bit lower, but certainly on the basis of those two charts and the fact that we're seeing an awful lot of volatility in and around $30 a barrel in the oil price, maybe there is some evidence of an intermediate bottom starting to come in oil prices. To get a view on oil prices, sometimes it's a good idea to look at the commodity currencies, and in particular the Canadian dollar and the Norwegian krone, which can act as proxy currencies for crude oil. And I think it was rather notable last week that we saw some significant reversal patterns in the Canadian dollar. Now, the reason I've looked at the Canadian dollar against the Japanese yen is essentially because Canada's a net export country and Japan is a net import country. So in that context, sometimes looking at charts like a cross like Canada yen can be instructive in terms of the overall turnaround in sentiment on a particular currency pair. So let's start by looking at the daily chart, and in particular at a candle last week, which I've identified as a hammer. Now, this hammer chart does appear to suggest that we could well have a base in place, but we still need confirmation of that. So what I've done with this Canadian dollar chart, this Canadian dollar Japanese yen chart, is I've moved it forward to a weekly chart. Now, the weekly chart, we've posted a bullish engulfing week. Now, historically, these sorts of candles tend to act as a positive arbiter of a rebound.